Good afternoon. How's everybody? I've just realised I've scheduled the stream for 1:15 rather than 1 o'clock. So I put it at 1 o'clock on here, but I put it at 1:15 on YouTube. So hopefully everyone will figure it out and turn up early. But anyway, we'll see. Afternoon, Amy, Evil, Danny, Monkey, Steve, Chucks, Callum, Philip, Rabbit Hole. Afternoon, Mark. La 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 la. Afternoon. Right. So we are looking at the euro rates this afternoon. So yesterday's Bank of Canada press conference, start off with yesterday, was a bit of a letdown. Very much a letdown. Nothing out of that at all. So I'm just trying to find it because there was literally nothing said. Macklem, after we had the rate announcement, basically kind of just said the path of interest rates is likely to be gradual. We don't need to move locks and step with the Fed, which we know everybody's disassociated themselves with the Fed because they're not doing anything. And so far, it's looking like a soft landing for the economy. Absolutely nothing about any forward guidance on what they're going to do with monetary policy moving forward. So obviously the Canadian dollar yesterday, we had the spike obviously on the news, but it undid virtually all of that. And we got back to origin today because there's just nothing happened. So we factored in that Canadian rate drop. We knew the 4.75 was coming. The market had already factored that in. So there was nothing to do to yesterday. So the market now is looking at it and going, brilliant, well done. No idea. We'll sit here and wait for you to tell us something or for something to happen. So I think the next thing to look for on the New Zealand dollar is the CPI numbers because it's coming down pretty fast, but it's absolutely miles away from target. It's double what the target should be. So, sorry, Canadian, talking about New Zealand. So yeah, Canadian, it's 2.7, and it's coming down fast, but it's just, it's not there yet. So I don't know. Really don't know what to do with that one. I've got a short on the US dollar CAD taken yesterday. I said yesterday on the stream, I'll be taking, let me just get that strategy test out of the way. So I said yesterday on the stream, I'll be taking a short on that yesterday, and I did. It's in profit, waiting for a little bit more movement, but not going anywhere. So the CAD basically is a dead duck. Obviously, this afternoon, we've got the ECB. We had some bit of news from Australia this morning, a bit more Bank of Japan talk, but nothing exciting. Other than that, overnight, really not a lot else has happened. So we're all about the rates for the euro, which is coming out shortly. We had construction PMIs this morning, which were positive for the pound, but nothing's moved much. So if you look at today's movement, ADR-wise, we've had the Aussie CAD. So basically all that's happened and all that's moved today really is an undoing of that CAD move, and that's about it. So Aussie CAD, A-shaped recovery. So if you took that ADR reversal this morning, well done. Too early for me. Euro odd. So this is Australian dollar move, obviously, and the US dollar yen, which is basically pushed down to ADR, pushed up to ADR, reset. So yeah, very, very odd yesterday. So euro today, I've taken 2 euro shorts this morning. I decided to go euro CAD because if the market isn't going to react bearishly to that Canadian rate drop, it could well act positively to it and undo the move that we had. So it means there'll be some strength coming through in the CAD. We've also got the unemployment rate for the Canadian coming out tomorrow, which is forecast to go up. That could well give the CAD a bullish stance tomorrow as well. So if we get this bearish move off of the euro today, and looking at what happened to the CAD yesterday, may not happen. But if we do get that bearish move on the euro today and we get some Canadian strength coming through on non-farm payroll and unemployment rates tomorrow, this is a very good looking short opportunity. I've also taken a short on euro US as well. I was in that from last week. I got out of it yesterday. I forgot. I didn't change the target on the EA, so it just got me out at 0.5% profit. I wanted to hold that. So as it pushed up again today, I thought I might as well add it back on again because that was an RSI extension from there, but it hit target. So I got in again. But yeah, so we're just waiting to see what happens with this afternoon. We've got 5 minutes to go. We've got US unemployment claims coming out 15 minutes after that. Another reason I've got US exposure on, because if we can get a decent positive number on that euro US could come down pretty hard today, could get a 200 ADR out of it. And I'm expecting Lagarde to be a little bit more bearish than anticipated previously, because we've just had a bounce on CPI, and the usual thing after a bounce is a drop. So I think she's probably going to come out and say today that they're looking at a 0.25 drop in August, and we will skip July. But there's a chance that she may bring that forward because we're getting very, very close to target. The pound is obviously pretty much there as well, and these two guys tend to move very much together. So I think it's going to be slightly more bearish than bullish, but we'll wait and see. Nothing we can do. We can't tell. So those are your ADRs today. That's the news overnight. Nothing much else to look at. The RSIs are flat. Aussie New Zealand is the only thing that's extended still on the 4 hour. We got a reversal alert on the hourly on that overnight and a retest, but it's struggling, really struggling to get that move in. So that thing is well overdue a pullback, as it was just before I got out. Yeah. So, I mean, if it's going to go parabolic up, could well just come parabolic back down again, couldn't it? But, this is just what we're getting at the moment. That. So I wouldn't be surprised to see absolutely no movement. If you get an ADR hit to the upside on it, probably worth taking short. But that is extended on the 4 hour still at the moment. Very big extension, that, though. If you look at all previous extensions below the 20 level, 4 hour, 20, 80 RSI levels are brilliant. Yeah, just brilliant. It's very rare you don't get a bounce off of those. So very, very good levels to take 80-20s on the 4, but they don't come along that often, as you can see. So this is going back pretty much 12 months. You've had 6 signals. Don't come around very often, but when they do, they're very, 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 very reliable. So assuming there isn't an interest rate change in the middle. So I'm going to watch Euro US. That'll give us the best indication. We've got 3 minutes until news. So once the news is out, obviously we'll get the knee-jerk reaction. The knee-jerk reaction will likely just be an ADR in one direction or the other, which is basically the market adding into or retracting from a confirmation of the interest rate drop. And then we'll wait for the monetary policy statement and the press conference basically to get fed into the market. And that's where we're going to get the movement after the press conference. So we're likely to get a knee jerk unless we don't get a 4.25, obviously. If we get a 4, we can kiss it goodbye. But I'd be very, very surprised. Very surprised. But then again, the Swiss did it. So why not? Afternoon, FTNet. Najorj, Virginia, George, Chris. Could you draw one of your famous weights on the New Zealand CAD? Don't need to. It's coming down nicely this morning. At the moment. Yeah, it's coming down nicely at the moment. But we got my targets are back down at this area in this propulsion gap. So we'll wait and see on that one. Is the DAX going to be bullish when the euro is bearish? Quite possibly. You're short on the DAX, are you? The DAX is going to move. I haven't got it open, but the DAX will move on the euro. Definitely. But I wouldn't be surprised if we don't see a massive movement on this euro. We know this is coming. We've known the euro. Lagarde and the European Central Bank are the ones which tell us everything. There's no surprises with the euro. The market knows where this is going and when it's going. It's very rare we get a shock. But you never know. Market will surprise. Afternoon, Crum, Cyril. But yeah, if the euro drops, the DAX tends to pop, and vice versa. But it doesn't always go that way. Doesn't always. Uh, 30 seconds. I've just opened my indices terminal, but there we go. DAX was a lovely clean break today. Yeah, we'll come and have a look at the DAX in a minute. Okay, spreads going in. Yeah, not a lot. So very little reaction to that. So there's your 4.25 as expected. So we'll see what the monetary policy statement says. Slight bullish move on the euro. Crazy, isn't it? Interest rates go down, currency goes up. But this is just orders coming in. So not necessarily direction. So DAX dropping or trying to drop as the euro is trying to pop. But there we go. So that looks like a pop on the euro. Look. Euro New Zealand ADR. Data freeze. Okay, so just hit ADR there. But I wouldn't expect that to hold that move. So if you are, that DAX will probably retrace back up. How far it will go down before it does that, though, you'll have to wait and see. FTSE's coming down as well. This is what I mean by the pound and the euro move very, very, very much together. Very close trade partners. It's in our interest to keep our currencies stable at the same level. Probably get a slight reaction on the pound as well. So slightly bullish. Not really doing a lot though. Let's see what's in the monetary policy statement. Confirm that it will reduce ecosystems holdings of securities under pandemic emergency purchase program. Continue to follow data dependent meeting by meeting. Inflation excluding energy and food. Project an average of 2.8% in 2024, 2.2 in 2025, and 2 in 2026. Okay, so an average of 2.8 in 2024. We're in June. 2.2. So they're not expecting to hit its target until next year as an average. Over the second half of the year, it will reduce the PEP portfolio by 7.5 billion per month. Okay. So nothing exciting in that. It doesn't look like there's any forward guidance in the meeting minutes at the moment. Not a lot. What a load of rubbish. Afternoon, Franco. So nothing particularly exciting at the moment there. So next step basically is obviously we've got the unemployment claims coming out at 1:30 in the middle. I'd be surprised if we see a massive move on that because they'll want to listen to what happens in the press conference. So what tends to happen is 1:45 the press conference happens. That goes on for about 15 minutes or so. Then we get about 15 minutes or so of questions. At the end of the press conference, that's when the market tends to make its move because during the press conference, Lagarde will usually give us some forward guidance as to what they're thinking of doing over the next quarter. So that's what we're looking for. The markets are looking for, should we be buying or should we be selling? What are you doing with your interest rates, basically? So whether that is bullish or bearish tends to start the move in a direction. Once we have that information. But as you can see, it's a dead duck, which is exactly the same as I was kind of expecting to happen because we knew what the result was going to be. However, wasn't expecting to be quite so bullish, but we'll see. So there's nothing much. I'm going to quickly whiz through all the pairs today and have a look at everything while we're waiting for the unemployment claims and stuff to come out. Because there's no alerts to look at specifically today. Aussie New Zealand is your only RSI extension. Everything else is flat as a pancake. So we'll whiz through all the pairs and look at where everything is. But you know, this is the reality at the moment. For the last couple of months, we just don't have any movement on anything. It's just nothing really going anywhere at the minute because we're waiting for interest rates to start to move. I'm really hoping that we start to get some traction now that we've got some interest rate changes happening. But after what happened yesterday, the first proper rate drop, which was forecast happening, and having no real movement before the rate drop, nothing's happened after it either. Yeah, so I'm just really hoping this market isn't going to just sit there and stagnate constantly, regardless. It's just not moving, is it? Nothing's moving. So the euro obviously is the bigger currency here. Hopefully that will kick off some moves and we can get stuff going. So we've got obviously non-farm payroll tomorrow. We've got the US CPI coming next week, which is the main focal point. And then obviously the Fed, who are not changing their rates. We'll get some guidance there. So now we got the euro out of the way today. We're waiting for the Fed next week. And obviously the Bank of Japan, which nobody knows what the hell they're doing. So once that's done next week, we should have a decision on when the Fed rate is going to change. Once the market knows this and they know what Lagarde's stance is, the two main currencies, hopefully they'll have an idea of bias and we'll start to get some movement forming. But I was kind of hoping we'd get a little bit more off of this today, but unfortunately not. So we'll whiz through all the pairs. If you've got any pairs specifically you want to look at, let me know. Good morning, Grateful Buster. Afternoon even. 5:21 a.m. here. Blimey. Would you trade the euro again in both directions? It depends what Lagarde says. So at the moment, I'm short only on euro based on expected interest rate drops. So because the euro is going first, the market should take up a bearish stance on it until something else happens. So if the Fed come out next week, for example, and say, we have decided to drop our rates in July, very unlikely, but if they were to come out and say something like that, the stance on the euro US dollar will be neutral again, in which case you can trade it in either direction. The pound are going to drop soon. So in theory, you should be able to trade euro pound in either direction. CAD have dropped. Should be able to trade that in either direction. But look at the impact. Look at what happened with the CAD. This is not what normally happens on an interest rate change. This is the thing. This market is not what it used to be. It's It's very different. It's almost like, it feels to me like the institutions have jumped ship on foreign exchange and they've decided to stick all their money elsewhere. And they're not really using this as an investment vehicle in any way, shape or form anymore, because it's just not moving as it used to. You get an interest rate change, you'd be looking at 200 or 300 ADR. And before that interest rate happened, you'd be looking at weeks of movement. Just not happening. So we'll wait and see. But yeah, I mean, in theory, you could, I mean, the New Zealand dollar and the Aussie are the main ones which have no forecasted changes at the moment. But that will change just because they are so far behind. Yeah, they are so far behind on inflation. They can't stop moving. The New Zealanders have said there's a possibility of going up to 5.75. So if they do think about doing that and they talk about that more and everybody else's interest rates are coming down, your stance has got to be short everything against the New Zealand dollar. Yeah. But apart from that, if everything starts to come down equally, we're going to have something being slightly stronger than another thing on news, which should give us some decent market structure movement, which is how we've always had it before this massive interest rate rally and freeze happened. So, it's a bit slow to kick off, isn't it, at the moment? Euro pound ADR. ADR there. But yeah, we'll wait and see what happens after Lagarde has spoken. Philip, Lagarde saved my arse. How? She hasn't spoken yet. If you've got a crystal ball, that was just the interest rate. We knew that was coming down. So Lagarde hasn't spoken yet. This is where the market's going to move here. 4 minutes to unemployment. DAX will be dropping. But that again will do one or the other when the press conference is coming to an end. So just be careful if you are in the DAX. It's going to be a bit volatile this afternoon. Could be that we are in an election year. No, it's not to do with that. The elections won't do much at all, really. They never do. You get a spike and you get a massive move around the elections, but that's it. In an election year, you focus on economics and economic growth, typically. And at the moment, every country and every bank is focused on one thing, inflation, getting that back down so that we can get back to economic growth and usual market conditions. So it's all about interest rate controlling inflation. Nothing else matters at the moment. If your country hasn't got any money to spend, if the cost of living is too high, your economy will freefall. You have to get that inflation down so that you can gain a healthy growth. So parties, if you have an election, it's all about who is going to bring the economy back on track. In the UK specifically, that's irrelevant, isn't it? Because Rishi Sunak brought us from 11 to 2. Job done. What's next? We've done this bit. It's just waiting now to see who goes and when they go. There's no bias. This is the problem. Yeah, I keep talking about a bias between currencies. If one currency is got a bias long because of economic growth, of interest rates rising, inflation rising, all this sort of stuff, and another country has the opposite, you know what to do. You long that one and you short that one. So therefore you only go long euro pound. The problem we've had over the last 3 years is everybody increased interest rates at the same time, starting the same month for the same period of time. Everybody stopped increasing interest rates for 12 months at the same time. And now everyone's talking about doing the opposite, which flattens the market. Keep talking about ADRs and how I used to trade pound New Zealand at 350, 450 ADR. Yeah. Look at pound New Zealand now. We're looking at 83. used to trade 3 to 4 times the volatility. It's just not there. And hopefully it comes back. But, you know, it's like if the markets get bored of something because it's just not working anymore, they'll do something else. There's plenty of other vehicles out there to invest in. Stocks, obviously. They've been going nuts, haven't they, for the last 18 months? So, who knows? But we'll see. Hopefully it all gets back to normal soon. Right, so news is just about to come out. Let's do the news first. So we'll watch pound US dollar again. 40 seconds to go. Euro US dollar got good shorts. Yeah, it's good. Good short opportunity. Let's watch Euro US. So bearish move, bearish numbers on the US dollar now will obviously send this through the roof. Bullish US numbers will indicate that we might get a positive non-farm payroll tomorrow as well, which means it'll be a good couple of days run of strength on the euro, on the US. Let's see what the numbers come out at. 2 seconds. Is that my terminal? Okay, so that's slightly bearish numbers on the US dollar by the looks of things. Ever so slightly bearish though. 229 on a 220. So yeah, just a very small miss on the US numbers. So probably enough to get us an ADR today, I should suspect. In which case I shall get another short. Not enough though. Right, so we're waiting basically now for the press conference, which is in 15 minutes. Thank you for the €5, David. Very much appreciated. Good morning, Goat. I like everybody saying good morning with €5. That's always a good way to say hello. Thank you very much, David. Much appreciated. We've been expecting them to change the rates so long they've probably already placed it in, hence the dead move. Yeah, exactly. That's what I said. The market's already factored in. The same as the CAD yesterday. The market factored in the Canadian move. So that CAD weakness, as you can see, was already there. So when the news hit, the move's done. And this is normal. This is totally normal. This is what I said. Before an interest rate change, you usually have a couple of weeks of continuous sustained rallying in the expected direction. We're expecting the drop, therefore we expect weakness on the CAD and everything will push against the CAD. When you get that news, and this is why you get these news spikes, it's basically the market adding into their position because they got the result they were expecting. If you get an unexpected result, i.e. if we'd have got something different, you'll be 200, 300% of ADR because the market has to unwind the move they've factored in and go, actually, no, that was wrong. They just get out. So when you get an expected result that has been factored in, you don't tend to get anything like an ADR. Yeah, I mean, the ADR dash, if this was an unexpected result, would be lit up like a Christmas tree. It's not. Euro odd, that's it. Euro pounds just tapped it. Euro New Zealand's just tapped it. So, but the press conference is what we want. That's what we're waiting for. Afternoon, Brian. Where's my guy Steve at? He's here. Hiding. Right. So let's whiz through the pairs. Aussies. To be honest, there's not a lot really I can say anything different to Monday when I went through all the pairs because we have gone nowhere. So as you can see, Aussie dollar CAD, we are sideways. We had some news. The news undid itself. Nothing's happened. Yeah. No ADRs, no RSIs, nothing. We had an ADR yesterday, which is fine. But the last trade on this was here. Job done. Apart from that, it's dead, flat as a pancake. No idea, going nowhere. ADR's contracting. We're just stuck. So we're playing a range at the moment. So there was an ADR hit yesterday at resistance, which was a lovely short. But obviously, trying to short against the Canadian dollar drop, difficult move. But it would have played out if you'd have done it. So I've just had a test finish. Let me just get those results out. New Zealand CAD. My friend New Zealand CAD. Minute. Start the next one off. New Zealand Swiss. Go. So yeah, Aussie CAD. No real movement on that. Stuck in the middle. Aussie Swiss. There's no, and the Aussies as well. We've got no forward guidance at all on the Australian dollar. We don't know what's going on with interest rates or when. So at the moment, it's neutral. And if New Zealand put their interest rates up, possibly slightly bullish. They are both, if you look at them, they're coming down at the same rate, 0.5, 0.7. We're up at 4, 3.6. But the difference is the rate, 5.5 to 4.35. The Aussies have absolutely no need to increase their interest rates. The fact that New Zealanders are talking about it is slightly worrying because I think they're expecting this to suddenly bounce and they're way too high. So, and this is the problem obviously the US has got at the moment. Not happening, is it? So Australians as well, the same thing. I don't think there's going to be any movement on the Australian interest rates in the near future. So you'll probably find this will get pushed around by the cross currency at the moment. So again, the Swiss franc weakening, potentially weakening on the back of the euro as well, which would make this bullish overall. So there is potential there for a move. You've had a couple of RSI extensions on this one there as well, but same thing, stuck. Not going anywhere. There's no structure after these moves. There's no pullbacks. Banks and institutions are not using normal market structure to get out of their moves at the moment. They're just sitting in accumulations for weeks and weeks on ends. Very hard. These Aussies are very difficult to trade at the moment. Aussie New Zealand undoing its move. So the 4-hour propulsion gap, which was the New Zealand dollar not changing their interest rates, and then the New Zealand dollar not changing their interest rates, has caused absolute lunacy. No need for that. No need for this either. Why did you not just sit here and do that? No idea. But that's where I would expect us to get to. So short, at the moment, it's a long. It was a long there. It was a long there. Yeah, again, news, nothing. News, nothing. News. Once we get there, we'll probably head back up again. We'll see. No idea. Aussie US. Totally sideways. I've got shorts on this at the moment. You can trade these, anything that's like this, you can trade it in any direction. Just got to wait and be patient because moves are taking a month. Literally everything is taking forever to get out of at the moment. So as you can see in this one from last week, end of last week, still in it, but beautiful. Long there, short there, long, short, long, short. Just keep doing whatever with it. The US dollar is just doing this. So anything against the US dollar is pretty safe at the moment till they come out next week. Potentially with that, we're going to change the interest rates date. So any RSI extension on this looks good at the moment. Obviously, hourlies is what I'm trading. So plenty of opportunities in either direction. You know, this is normal market structure. One of the few that's actually moving in normal market structure. The US dollar is always moving in market structure because it's the strongest currency. It's going to push everything around all the time. There's no directional bias. So when it stops pushing other things around, it gets pushed back, which gives you lovely movement up and down, which is exactly what we want. So that's all stuck as well. Steve, thanks for the €5. Good morning, David Montoya. Are you Lee's accountant? No, he's not. But yeah, thank you for the €5. Very much appreciated. I like having you two in the stream. It's good. After several hours of backtesting, I've settled on H4 extension using 10 RSI, not trading the Swiss or yen pairs. 10? Yeah, you could do. Trouble is, you're not going to, I mean, 10 and 90 RSI, you're not going to get any signals on a 4 hour. Using the 10 RSI, sorry, 10 RSI. Okay. What levels though? 10's obviously a lot faster. If you're using 80-20, yeah, it's not bad. I mean, it's not far out from the 14. You are going to get a lot more signals, though. Debatable there, isn't it? Yeah, looks good. That'll work. Why can't I click on my RSI? Thank you. Yeah, I mean, you're going to get just going to get a lot more signals, which in these market conditions is probably not a bad idea. But don't forget the dangers of switching. RSI, yeah. So if you switch down to the 10 and all of a sudden the market starts to trend hard, you're going to get in earlier. It's always tempting to change the instrument, but there's no right or wrong. I picked the 14 because the 14 is what I've always settled on and I've used. It doesn't mean it's right or wrong. Sometimes it's brilliant. Sometimes it's crap. 10 will be brilliant sometimes. Other times it will be crap because it won't give you all the signals. It'll give you too many signals. Yes, there's no right or wrong. There's nothing wrong with the the 10. So yeah, give it a go. New Zealand dollar CAD, we'll get to that in a minute. Oops, watching Starship launch. I'm trapped inside a rocket. Someone let me out. Are you sure, Steve? Getting out opposite extension level, whether in profit or not. Yes, that is a good exit criteria. However, I am finding a better one. With RSI extension, if you're using the 4 hour, the best exit you will probably find will be exiting on when you're in profit at the end of a day. Worth testing that. So it's a bit difficult to do on a 4 hour chart, but if you get into an RSI extension, just get out when you're in profit. Scale in, get out when you're in profit. Simple as that. That's what I'm finding with the RSI2 strategies, by far the best exit criteria. I've tested I've tested opposite signal. I've tested end of day. I've tested TPs, fixed TPs. I've tested all sorts of things. End of day exits seem to be the best. T-minus 8 minutes. They're going to take off just as Lagarde starts to speak. Oh, speaking of the Lagarde starting to speak. We need to get ready for the man. I will come back to the analysis in a minute. This is much more important. So, today, bets. Who thinks the man that is going to remove the barriers is going to be bald or have hair? Take your pick. Bald or with hair. For those of you who haven't played this game with me before, these barriers here get removed by a man just before the press conference. It's a very important job. He wears a suit for it as well. But we never know who he's going to be. Last time he was bald. Will he be bald or will he have hair this time? We'll wait and see. How long have we got? 2 minutes. Just pop that over there for a minute so I can keep an eye on it. We'll come back to that in a sec. Going to appear in a minute. Hairless. Completely hairless. Recovery from yesterday's losses, back on profit course. I'm going to pass out now. Good night. Okay? Don't pass out, Franco. Just go to sleep. Did you know about any of the Essex guys that were trading oil when it went negative and they made millions? No. Someone's always making money when stuff moves up and down. Afternoon, Abdi. Yeah, with 75.25 levels on that 10 RSI. Good one. I'll test that. Good one to test. I'm still a Flintstone trader using TDI custom settings. Nothing wrong with that. TDI is just an RSI. So have hair, bald, hair, bald, hair, hairless, bald. Barrier Man could be a new Marvel series. Yep. With hair and a limp. Definitely no hair, bald. It seems 50-50. Let's see what AI thinks Barrier Man is. Good one, Brian. Barrier Man hasn't come out yet. I'm waiting. He'll be here in a minute. Right, where are we? CAD. Swiss. So obviously, at the moment, CAD Swiss, CAD coming down hard. Swiss franc's recovering from its weakness just as we've had that CAD move happening. So we are, at the moment, out of the monthly lows, but the market has paused. So good push back up into propulsion. Lovely RSI extension on the hourly. I'm not trading it at the moment, though, the Swiss. Here comes Lagarde. Right. Is that Barrier Man? Or is Barrier Man going to come from the side? He could be Barrier Man, but he's got a gun under there. Let's see. Barrier Man is coming. He's coming. Very exciting. With a black eye. Barry the Barrier Man. Could be called Barry. Dressed as a woman. We've never had a barrier woman. This looks like Barrier Man. Oh no, look at the gloves. He's a hitman. Look at him. Look at him. Eyeing up, seeing who's got guns in their cameras, look. Not that important. I know she's the head of the ECB, but come on. Where's he coming from? Oh, look at this lot. They look like they're about to pounce, don't they? Getaway driver, yeah. He is going to grab Lagarde, bundle her into the back of a car. He's going to drive it off with his hitman gloves. I reckon this is Barrier Man today. And he's bald. That's my bet. Excuse me, sir. Could you off, please? Here he comes. Oh, it's him. It's the getaway driver. He's got hair. It's the getaway driver. Hang on a minute. There's two of them. I get getaway driver with hair. Bald does the other side. It's a 50-50. They both won today. Well, there you go. Bald and with hair. Although, to be fair, with hair did 2 barriers and bald only did 1. So we'll give it to the people that went hair. There you go. So Lagarde is speaking. So now we'll wait and see what happens with the euro. It's a good fun game, isn't it? You've got to do something exciting in trading rather than watch candlesticks going up and down all day. Neither of them had specs, though. So, sorry, you lost there. Black gloves, fake hand, gun in hand. Yes. Could be. 50-50. It was break even, yeah. So 50-50. That's why I go hair or bald. There's nothing much in between, is there? Mullet? Bald with a mullet? I don't know. Anyway, CAD Swiss. It's a 2-man job, yeah. Normally there's only 1 man that does it. They've ruined it this month. Anyway. One guy could just WhatsApp the rest. Must they all take pics? I know, it's ridiculous, isn't it? There's only one photo going to be, and where's that photo even go? Surely they can take one and use the same photo every time. It's not as if they do anything different. It's the same 3 people standing on the same stage with the same barriers every month. Shuffles her papers before. That's a signal, by the way. If she shuffles her papers 3 times, interest rates are going up. If she shuffles them 5 times, interest rates are going down. All the conspiracy theorists out there. So anyway, CAD Swiss, while we're waiting for her to talk. Just down at this accumulation again on the CAD Swiss, we're finding support here at the moment. Obviously, CAD rates came down, so therefore we should expect it to have a slightly more bearish feel to it now. Although the euro rates are about to have come down as well, which will obviously weaken slightly the Swiss franc. So again, neutral bias on this. Obviously, it's collapsed off the back of the Swiss having a big rally, but good level of support potentially here. Very nicely extended. Massive divergence. I mean, the divergence is almost immeasurable. That is that low there. That is that low there. Obviously, price has dropped dramatically, like multiple ADR without relative strength. So a good chance of a pullback into that, I think, at some point. So good looking long there if you want to trade the Swissy. Yens, I'll cover all the yens again. We've launched, the rocket's launched. Steve's just said. Pound odd ADR. Pound odd. Oh, yeah, it's just undone the move. So all the yens overnight, we had nothing from Ueda or Suzuki or anybody regarding the monetary policy stance on the yen. So we've had this couple of days worth of rally, which has obviously, I mean, on the CAD yen specifically, jumped straight into the 3-week low, bought the crap out of it, straight back into the previous weekly low and last week's. And now it's being sold off again from that level. So this is the battle zone at the moment. There's no directional bias on this still because we have no idea what is going on with this yen. So with all these yens, really no idea which way it's going. At the moment, it is going up and down quite nicely. So right now, if you're going to do anything with it, doesn't really matter which way you go. Obviously, the swaps will be more beneficial if you go long. And it doesn't sound like there's going to be an intervention coming again from the Bank of Japan. Swiss all-time highs. Yeah, so this yen is still incredibly weak, and the intervention has completely failed. So the question is, have we got the strength to move the yen further? They're going to put their interest rates up next week. Next week, the week after. Next week, next Friday. So after the Fed. So they put their interest rates up next week, or they're forecast to. What they do, we don't know. Whether that has any impact or not, we'll have to wait and see. So in theory, putting their interest rates up should power up the yen. This could be the start of the market buying into that move. Yeah, remember the market always goes a few weeks before the forecast move. So they position themselves ready for it. That's why it's factored in. That's why we don't get a lot of movement on the interest rate announcement itself. So this could be this move that we had, the start of that happening. In which case, then you should be bearish for the next week and a bit, and then does what the hell it likes. So we'll have to wait and see. But I can't make head nor tail of this thing at the moment. When you get stuff like this happening, it's just a lottery. This could well have undone itself like this. It could have absolutely collapsed as it did for the last 2 interventions. Just didn't, we're back to where we were. We're not doing anything at the moment. So very hard to call anything on the yen. Best thing to do is just to steer clear for the moment until we know which direction it's going. New Zealand dollar yen completely undid the intervention weeks ago and is still rallying against it. It has hit a double top at the moment, though. So we might be forming a range. Wait and see on that one. And the US dollar yen, obviously, which is the main driver for the yen. We had the initial breakout, and then they rallied the crap out of it. We undid the whole lot yesterday. That entire move, 225 ADR, undid it again completely. V-shaped recovery. Yeah, this is what tends to happen when it's just a profit take. We then start a new leg. So if we get decent numbers, so we've obviously just had a negative on unemployment claims. If we get positive unemployment rate tomorrow, that US dollar is going to have the strength to take off against that yen, and that could well start the next leg up. So I have to say, I think it's more bullish than bearish. But what scares me about going long on anything against the yen at the moment is the chance of that intervention move again. And if that happens, you're stuffed. Or are you? I don't know. You're short-term stuffed, certainly. And for me, specifically, with automated drawdown control, that would trigger. So, you know, look how long it took, basically, to unravel that move. Yeah, you're going to be in it for weeks if it did do another intervention. So just not really interested in it at the moment. So euros, obviously Lagarde is talking at the moment. Nothing exciting said as yet. So with the euro, basically, as you can see, very neutral against everything at the moment. Again, euro pound, I was stuck in for 6 weeks because it's just stuck. It's just not doing anything, the euro. So now that we've got the 2.5 drop on the interest rates, the stance in theory is bearish, especially against things like the Australian dollar and the New Zealand dollar, who are not changing their interest rates. So as these guys are strong and we get a little bit of weakness coming into that, this should start to drop. But as you can see from today, so far, obviously, it's had a slightly bullish reaction to the interest rate drop because it was already factored in. But we're waiting for Lagarde. So we need to hear what she says about forward guidance. If she gives us no forward guidance, we'll expect the same. Yeah, so it doesn't matter which way you go on it. It's going to go up and it's going to go down. So it's at the moment, it's neutral. If in the next half an hour she hasn't said anything that is massively bullish or bearish towards the euro, we're going to be in the same stance, the same boat, not going anywhere. So Euro CAD, again, obviously, Canadian dollar should weaken off the back of the interest rate change. We didn't get any forward guidance, though, so that makes it slightly bearish to neutral, which would make this slightly bullish. Right now, today, this has just changed slightly bearish. So you've got a bearish against a bearish, which gives you nothing, neutral. So again, this should be okay to trade in either direction at the moment. But if one of these currencies is going to move faster than the other, it's going to be the bigger one, which is the euro. So if she comes out bearish, the euro is going to drop an awful lot faster. Barrier man has arrived. Oh, God. Oh, his head's cut off. Save it. So this is Barrier Man as far as AI is concerned. Half with hair, half without hair. So it's pretty accurate. He's quite old though, isn't he? Why is that not opening? Okay, Barrier Man. That is officially Barrier Man. That is Lagarde's Barrier Man. Okay, well, I think we've just found the second problem with AI. So we know AI has a massive problem with fingers. Yeah. And this poor Barrier Man's got a very bad thumb. And he seems to have the barrier embedded in his stomach. He is a barrier. He is actually part of the barrier. But look at cars. What's happened to the cars? They've all melted. When have you just seen a car with a number plate over there? And what's that? Look, its wheels are higher. They should be down there. And you want to let this thing in charge of your trading account? He looks like he's been run over by France. AI is brilliant. Look at that. He's properly disabled, isn't he? He's got a barrier through his leg. Anyway, I'll keep Barrier Man for next month. Look at his eyes. Yeah, he's drunk as well, isn't he? Got an ear problem as well. He's half elf. Anyway, Barrier Man. It's so good, isn't it? Like, it's like it puts hair on his arms, and you know, he's got good muscle definition. He's got wrinkles in his arms and stuff, and then it just ruins it, doesn't it? Just ruins it with just stuff. It just goes, just don't really get legs. Let's just stick a bar for it. Yeah, whatever. What's a car? Don't know. I'm a computer. I don't need one. Something that's got 4 wheels, is it? I don't know. Where do the wheels go? Anyway. It's good, isn't it? Morning, Harold. You've no idea what you've just walked into, have you? Euro CAD. So yeah, Euro CAD obviously is a bear against a bear now, which makes neutral. So expect more of the same unless Lagarde comes out and says anything in the next half hour or so. Euro Swiss, the Swiss franc tends to move with the euro. The Swissy obviously has become a lot more independent over the last month or so since it changed its interest rates unexpectedly. Like to see him walk. Yeah, that's what we need. We need animation from AI, don't we? Yeah, the euro has become a lot more independent and a lot more unpredictable since they suddenly decided to drop their interest rate without telling anybody, which is what they have done many times in the past. So it's a little bit more unlinked now, the euro and the Swiss. So obviously you can see when the Swiss franc goes on a run, it stays on a run. It's a safe haven currency. So money tends to pump in and pump out. When they change their interest rates, we got that. So this is one of those pairs, a little bit like the euro pound, a little bit like the US dollar CAD, where you will find it will move quite a lot up and down independently, and you can trade it in any direction. However, it takes forever to get out of things. You can see that trade there that took, 2.5 weeks to get out of. It's just the way it tends to go. So at the moment, it's massively extended on the 4-hour to the downside. We've had multiple long signals or long conditions on the hourly as well, starting from there. So it is a good looking long opportunity at the moment to undo that leg. However, as I say, market structure is very difficult to achieve at the moment. So you kind of want to always be targeting the closest propulsion gaps and just get out, even if they're not a lot of money, get out, because it's very unpredictable. It's more likely to do that than it is to do that. So nice extension. We've had a reversal on the hourly, so we've definitely got that strength starting to come in. But if the market decides it doesn't like what Lagarde says this afternoon, we're going to be back down at that monthly low. So you got divergence again. And, this is why I don't trade divergence. You see divergence all the time. Divergence doesn't work. It's a lovely little confirmation to have on top of something. If you get something hitting a support and you get a reversal alert, a level of support, and you happen to have divergence there, it's just another tick in the box, but don't just trade divergence. It doesn't work on its own. So yeah, obviously it is coming down and the relative strength is going up, which means it's dropping on weakness basically. So good chance of a pullback on it from where we are. So you would be in from there already, probably in 3 to 4 positions at the moment on that one going long. Euro pound. Still not said anything exciting. This is going to go like the Canadian. It's not going to happen. Euro pound, again, stuck, as you can see here. Yeah, I've been stuck in this multiple times, and it just is taking forever to move at the moment. It's 26 ADR. Yeah, it's almost as little as oil moves, and oil doesn't move much. Yeah, so again, euro and the pound trade partners. It's in its interest to stay stable. Therefore, we tend to spend 90% of our time in a range with the euro pound. So you can trade it in any direction. It's just ridiculously slow. So 26 ADR, don't expect to get much movement out of it. And when it does move, you know, it takes days to get anywhere if it moves. So the fact that we've got the euro now going potentially slightly bearish, and we've got Bailey announcing potentially a rate drop in July, maybe August. Again, stance is neutral. So there's no reason for anything to go anywhere. So this one you could take long and short, but as you can see from the RSI, you don't get that many signals on it. And it tends to, when it does have a reason to go somewhere, like factoring in a drop on the euro, go for days and days and days on ends, and then just sits there. So it's a tricky one, euro pound. But you should be able to trade it in any direction. Sorry, let me just quickly grab that. I'm just running an optimization at the moment, or a system parameter permutation test on a strategy, and I'm doing 16,000 system parameter permutations over every pair. So it's taking about half an hour per test, and it's very time consuming. So I just wanted to stay on top of it because I'd like to get it finished today, if possible, which is going to take a while. Yen. Start that one off. So yeah, so euro pound, you should be able to trade that in any direction again. But, you know, we've had a very big squeeze on this. But, you know, that's all it does. So you've got to hold this one, and it will come back up into there, I'm pretty sure, at some point, unless Lagarde obviously drops the hammer today. So it's just a case of holding it and sitting through it and waiting, and it does take forever, euro pound. So, but the stance is neutral on that one. Euro New Zealand, the way the New Zealand dollar is going, and the fact that they're threatening to increase interest rates again after a 12-month freeze is bullish. Euro's just dropped its interest rate. So the stance on this for me would be short only, definitely. However, the problem I think you're going to find is getting in a short. So any ADR hits to the upside, short. Any RSI extensions to the upside, short. But I think you're going to find it hard work getting an extension to the upside. We've got a Euro New Zealand short now, right now, but that's because we're just had an interest rate change on it and we're waiting for Lagarde to speak. So yes, getting short now, but if Lagarde says we're not going to change the interest rates for 3 months, you're going to be back up here. So wait for Lagarde to finish, then it's more likely going to be a good short opportunity. So I wouldn't want to really be going long on this one at the moment. We are, if you look on the 4 hour, approaching this low, which has been for probably the last year, roughly. When's that? May. So June, yeah. So the last year, this has been the support. Every time we've got here, we've brought this level back up, which is 175 roughly. This propulsion gap we have just tested today. So there is a chance of getting a bounce out of it. But the stance for this whole 12 month has been neutral. The stance potentially right now in the next half an hour is changing. So if it breaks out of that low, you're going to be dropping for quite a few ADR, aren't you? So much rather do that, but it's going to struggle, I think, to get up there. So shorts ideally on that one. I'm letting the EA just try and find me an entry on it. But as I said, you're not getting extended to the upside because there's just no strength in it, because they've been selling the euro off for the last couple of weeks ever so slightly. And the New Zealand dollar's had a good rally for the last couple of weeks. So struggling to try and find an entry on it, but do not want to go the other way. Euro US neutral. So starting to retrace now. But yeah, this one at the moment, euro bearish, US dollar going nowhere. Market doesn't want to take it long, doesn't want to take it short. It's moving it about a lot. So pretty much you can trade it in any direction. So again, this is one that I would like to take in either direction still. But I'm waiting for Lagarde to see what she says and see if anything comes out bearish or bullish. Not at the moment. This is just like yesterday. There's just no bullish or bearish stance or forward guidance coming out. ECB is ready to adjust all instruments as needed. The cut was justified by confidence in the path ahead. So CPI coming down. Confidence inflation increased over the last months. Decided to cut based on reliability of projections. So, yeah. Nothing yet about forward guidance. So she will be asked that. 100% she'll be asked that in the press conference. So we'll see if she actually gives any clues. So those are your euros. So right now, obviously, you can't make any decisions on the euro until this press conference is done. If the press conference finishes and there's no forward guidance and the market doesn't move today, kind of gives you the answer, doesn't it? We don't know. And this is what we've had all year. We don't know. So you can expect it to be irrational and do whatever the hell it likes. But you're going to get the odd shock like we get with the US when they go, actually, we're not going to change the interest rates. What do you mean? And all this sort of stuff. And then it'll undo itself. But everything is taking forever. So can be traded at the moment in both directions. Pound, no idea. At the moment, we're waiting for Bailey to decide. Bearish more than bullish because the euro has now dropped. If you look at the interest rates and inflation for the pound compared to the euro, euro is on 4.5 or 4.25 now, on a 2.6. The pound has now hit 2.3 and we are at 5.25. So we are now 1% higher interest rates with lower inflation figure than the Eurozone. It's got to come down. We've also got an election coming on the 4th of July, which means that the government will want the Bank of England to drop that rate, or at least say they're going to drop that rate as fast as possible. We obviously haven't got another... Oh, no, I have got another meeting. Hang on. When's the pound meeting? Pound meeting is Thursday, the 20th of June. So the Bank of England have said they're not going to be dropping this in June. Yeah. I wouldn't put it past government to say, please, because we've got an election coming up in a couple of weeks' time after this. So I think there's a good chance of a July drop on the pound. If that is the case, the market will start to factor that in, which means we'll start to see, and we already are to a certain extent, a weakening pound. So the stance will go the same as the euro, more bearish than bullish, but the vast majority of currencies, as they're going bearish, means that they will all be doing roughly the same thing. So if you want to be safe, you're better off shorting it moving forward. But right now, we don't know. And there's a good chance, I think, of a shock coming in the June, either from Bailey saying 100% guaranteed it's going to be July, or government pushing the Bank of England to drop it in June. I doubt they will, but we didn't think the Swiss would drop, and others also have come down faster, like the CAD. So there's a good chance we might see a little bit more bearishness coming into the pound. So again, any extensions to the upside, good shorts. At the moment, I'm long and short pound, so I don't mind trading in either direction. Things like euro pound, short only. Euro New Zealand 125 ADR. So a little bit of a rally in the euro there. Git. We are not going to tell you much. We're not going to tell you until much later in the summer if we do something now or at another point. Much later in the summer, towards the end of July, August. So Lagarde basically saying we are moving into the dialing back phase. Are we moving into the dialing back phase? I wouldn't volunteer that. She's not giving us any information. We'll need more data to confirm a disinflationary path. Okay, so she's basically saying, I'm not telling you what we're doing. So there's a 50-50. We may get a drop in July as well. That's basically what she's saying. I'm not going to tell you. Thanks. So a little bit of a pop on the euro on that. Which doesn't help, but we'll wait and see. There's more coming, hopefully. Typical. Really, really hoping she would give us something, but she's not at the moment. So where was I? Pounds. I was doing the pounds, wasn't I? So yeah, all these pounds basically more bearish than bullish potentially, but you know, things like this happening today and what's happened with the CAD, they dropped the interest rate and they're still like, we're really not sure. Yeah, it's almost as if we've completely forgotten what we used to do for the last 100 years with inflation and interest rates. COVID came along and everyone was like, what do we do now? It's like we're driving a rudderless boat, isn't it? You know, well, inflation goes up, you put interest rates up, inflation comes down, you put interest rates down. Guess what, everybody? Inflation is coming down. Oh, we're not too sure. You've always been sure in the past. What has changed in the last 4 years? You know, it's just pull your fingers out. Thanks. Anyway, short at the moment. So that's a lovely looking short on the Aussie at the moment. Worst case scenario, an ADR. Best case scenario, 2 ADR. Assuming that we are doing the same as we've done for the last couple of weeks. So again, we get moves, stuck, moves, stuck. If we're staying stuck, you want to be shorting it. If we're getting another move, more likely going to be that way, to be honest. So it looks like a great looking short opportunity, pound odd. Pound CAD, I'm in this with the New Zealand dollar at the moment. Obviously, I'm in the wrong way because of the weakening Canadian dollar. I really would love Bailey to come out this afternoon and say, because Lagarde said that, we're going to tell you that we're dropping the interest rates in June. I'll be out. But yeah, at the moment, we're stuck. Just this nonsense sideways movement that we are getting over and over and over again at the moment. Very little you can do with it. It's more short than long, but obviously that all changed yesterday. So it's now, that is the bias right now. That's where the initial entry was. And obviously then they've scaled into the Bank of Canada drop, which we got. So there's potential that this could go higher. But just got to keep your eyes peeled on Financial Juice for any negative news on the pound and also any news from Bailey. The Canadians haven't obviously said what they're doing next. So yes, yesterday, or rather yesterday there, we had the drop in rates, but no idea what's happening next. So there's no guarantee that the Canadian dollar is going to continue to drop. It could go either way. So pound Swiss, again, Swiss franc is just all over the gaff at the moment, as you can see. There's no real bias on the Swiss. I'm out of the Swiss until I kind of know what they're doing with their interest rates. The Swiss is an anomaly in the same factor that the yen is an anomaly, in that they have inflation completely under control. They have their interest rates completely under control. There is no reason for them to go up. There is no reason for them to go down. We had zero change on inflation. We've had zero change on interest rates. There is zero reason for the Swiss to do anything apart from move on a safe haven run. So it's neutral. It's stuck. But the problem with the Swiss is when it goes, it just takes off for weeks on end, doesn't it? So it's very difficult to trade the Swiss at the moment. There's no directional bias on it. So you'd have to say probably more likely that, isn't it? And so I'll be looking more for shorts than longs. But it's very, very difficult to tell with the Swissy at the minute. I'm out of it. Pound New Zealand, I've got longs on this one at the moment. Just trying to get out of this as well. It's just, just stuck in stuff. It's just stuff gets stuck and then it moves a little bit. Then it gets stuck again. So longs on this one back up into here. Again, stance will be shifting probably bearish on the pound, won't it? When we start to get hints that the interest rates are coming down. But until then, this can go either direction. New Zealand dollars had a very nice, big, strong rally along with the Aussie. So there's a good chance that that will start to unwind. The fact that the New Zealanders have said they might increase their interest rates means there's a good chance that the pound will drop against New Zealand. So we'll wait and see. The market doesn't seem to have reacted to that news. It seems to have glossed over the fact that they were going to increase interest rates potentially. Maybe they didn't believe them. We'll wait for the next CPI numbers to come out, and then the market will obviously probably make a decision on it. So there's a good chance we might get a serious bit of strength in that New Zealand dollar, and in that case, obviously the Australian as well. Pound US shorts on at the moment. Yeah, don't have a problem with that at all. Down. Continuation. Should be no problem. But we just need some news. The US dollar has been the unluckiest thing in the universe this week, isn't it? We've had negative PMI figures, followed by negative jolts, followed by negative unemployment, followed by a slight positive on the PMIs. And it was a fairly decent positive, but the market went, no. Followed by bad figures on unemployment. So if we get a bad non-farm payroll, everything's going up against the pound. So everything's going up against the dollar. So yeah, it's stuck absolutely fast. So I just want to shut this terminal because I do not want to trade the US session this afternoon. So pound's coming down nicely at the moment, but not really, as you can see, going anywhere, and not many signals either being triggered by this. So shorts more than longs, but we really, really need some decent US dollar news, some bullish US dollar news. That pound's coming down. The euro might be coming down as well. Nice rejection at the moment. So market really not liking what Lagarde has said. I wouldn't say they dislike it either. Next few months will be bumpy. New Zealand dollar, at the moment, it's a bull move. Obviously, as you can see, it's been rallying for weeks and weeks on end, ever so slightly strong, that sort of thing. So it's just got relative strength against everything at the moment because the market is expecting every other currency to start to drop rates. Therefore, as the New Zealanders have said, we are not dropping rates. It is by nature more bullish. However, it's a very weak currency, very small economy. So it can't make massive progress very quickly. As you can see, we get fits and starts all the time, just squeezing like hell at the moment. So all New Zealand pairs, especially after what the Bank of New Zealand has said about potentially increasing interest rates, you'd have to say it's more of a bullish stance on the New Zealand against everything. However, it's desperately due a pullback on the up leg. Yeah. But, this is what we're seeing at the moment. So I wouldn't be surprised if we just get stuck. However, if you look at resistance levels, and someone pointed this out in the Telegram group, we've got some very decent resistances coming up here. So this first area here, I'm just going to draw it as a box because support and resistance is not a level, it's an area. So we've got this whole area coming up here, which is resistance. So that where we are now at 100 ADR, this is where we sold from multiple times. So this whole bearish move that we had started at this area. We've basically hit every resistance, and basically just flagged and broken. We hit the resistance. We got accumulated there, broke it, failed because we hit that resistance. Yeah, flagged, broke. Yeah, so we're coming up into multiple resistance levels again here. But the difference between hitting these resistances on that run and hitting that is it's absolutely exhausted. Yeah, it's been running and rallying now since the end of April. So 2 months, we haven't had a pause, we haven't had a pullback, we haven't had a profit take. So there's a high probability, I think, of that type of movement coming in. If not just a straight pullback, but an accumulation pullback. So this is where I think we're probably going to hit the brick wall. If it doesn't fall short and just start to roll over now. But obviously we've had negative news on the Canadian dollar with the interest rate drop, but we have had neutral news in the press conference as to what they're going to do. So we have no forward guidance from the Canadians. So it's basically down to the New Zealanders to decide whether or not they're going to start to pull out of this move. So we'll see what happens with it. But at the moment, it's a rallying beast. So market structure is really nice on the New Zealand dollar Swiss at the moment. But again, it's just too squeezy. The Swiss franc, unpredictable at the moment because it's dropped its interest rates. As soon as it dropped those interest rates, it took off. And it's not, it's not stopping. So I'm not trading that one. New Zealand US got shorts on at the moment. Again, no problem with this really as a short. Slightly more bullish bias than a bearish. Got nice resistance coming up at the moment, but there is a danger of running another 200 to 300 ADR or more up into those highs. So deal with that if it happens. But been scaling out of this one as well. Just stuck in squeezes at the moment. It's just terrible. Everything is just in a hideous squeeze. Waiting for something, but not happening. US dollar CAD, total sideways. Been trading this one beautifully. Up, down, up, down, up, down. Lovely. I'm short at the moment. Take it in any direction. Any extensions you get to the upside, we're pulling back. Anything extensions you get to the downside, we're pulling back. It's just up and down. It's great. US dollar Swiss, again, rallying. Swiss franc, straight back into propulsion. And again, we're looking for a pullback on that and continuation down potentially, but the Swissy could just increase its interest rates, drop its interest rates anytime it likes. So just too volatile at the minute. Could go either way fast. But if you're using stop loss based strategies with the Swiss, they are great because it's something that is the yen and the Swiss, if you're using a stop, not a problem at all because if it does work out the trade, it can just go for days and days and days on end. So there is a beautiful thing to do that with. But position trading at the moment on the Swiss specifically and the yen is just too much of an unknown because they are not reacting in the normal way to interest rates and inflation as everything else is. So just got to kind of treat them with kid gloves at the minute, same as the yen, obviously. So very difficult to call anything really at the moment. Stance basically for me is bearish euro, bearish pound, long New Zealand, long Aussie, neutral on the US dollar. Canadian dollar probably falls in the same as the US at the moment. Yes, we've dropped the interest rates, but I don't really know where it's going because we haven't had any guidance. And Lagarde is doing exactly the same thing. We're still questioning. That's a great haircut. We're still questioning Lagarde. Hey, look, Barrier Man. He's there. Wow, someone's got to remove those barriers as well. Blah, 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 blah. Right, that's all the pairs covered. New Zealand dollar CAD today, we got a nice drop started. So we've had a reversal alert at yesterday's high. So we had a nice rejection at yesterday's high. Had to do some DD control on that position. I took a second short here today just to try and get some extra size on to get this average up, because I'm worried about this continuing to rally on weakened weakened Canadian dollar. So that's my overall target at the moment. But this area here, I'm just worried about it going into either a range or popping back out. So I put an extra position on there to try and get the average up so that I could at least take some profit off and reduce some of this pressure down below. And it seems to be working at the moment. So basically that entry was basically taken off of the hourly reversal alert. So sellers fully in control. We have pushed down from that reversal alert. We've retested it. The propulsion gap has held at the moment. So this candle that retested propulsion, if that high doesn't get broken today, there's a good chance of a drop tomorrow. So I'm going to hold on to that. If that breaks up too much higher, though, I'll close one of those out. But just want to get out of this at the moment. Got to get aggressive on it because it's just not letting me out at all. It's just squeezy as hell. And this is the problem with position trading. When the fundamentals shift while you're in a position, there's nothing you can do about it. You have to take a decision to cut it at some point. So my cut is above ADR today, which is about 175% of ADR yesterday, which was up here. So I know damn well I will have to cut it if it gets too much higher. But if it gets up into there, exactly the same as the Aussie New Zealand, if I cut it, you get in, because I can guarantee you as soon as I get out, it will go. Yeah. And I've proven it many, many times, haven't I? I get out, intervention. Yeah, it's just the way it works. And this is why they call it a squeeze. You get squeezed to a point where you are uncomfortable. When you're uncomfortable, you get out. When you get out, everyone else gets out. When there's nobody left, the market cannot buy anymore because there's no one going to sell it to them. So they drop it. You just got to try and hold on through the squeeze. That's the problem. But at the moment, we're just getting squeeze after squeeze after squeeze. Right. It's a painful, painful start to the year this year. But I'm really, really hoping that these interest rate drops are going to start some normality and some normal market structure movement. But we will see. Not working at the minute. After your analysis, could you give any insight onto how RSI2 strategy is going? Yeah. Got out, now it's selling. Yeah, you will do. That's what happens. The analysis that I'm doing at the moment is I'm doing, as I said, I'm doing 16,000 system parameter permutation tests on the strategy. Overall, just get these sorted. New Zealand CAD, I haven't sorted either. So I just got to try and keep track of where I am with this because I'm trying to talk and do testing at the same time, which is always a problem. So all of these tests I've done, so I'm up to New Zealand dollar Swiss, obviously started Aussie CAD. So each of these pairs has had 16,000 parameter permutation tests done. They're all passing with flying colors, most of them. So I'm not expecting the Swiss to do well. I'm not expecting the yen to do well because they're trending pairs. So from a mean reversion perspective, which is what RSI2 is, Aussie CAD's got 13,000 out of 16,000. We've got 10,000 there on Aussie Swiss, which is a bloody good result for a Swiss franc pair. Aussie yen, 6 grand. So we lost 10,000 permutations there that didn't work. Aussie New Zealand, 6,000. I need to look into why that is on the Aussie New Zealand, but that doesn't seem to be performing particularly well. I'm not quite sure why. This is a 4-year test post-COVID. Aussie US, 13,000, 13,000 CAD Swiss, 1,000 CAD yen. Yeah, the yen is just terrible for mean reversion. 12,000 EA, Euro CAD, 12,000. Euro Swiss again, 5,000. So the Swiss franc again not performing well. Euro pound, 12,000. Euro yen, 5. Again, yen pair. So it's just confirming basically all this data crunching is to confirm my suspicions. Shouldn't be mean reversion trading on the Swiss or the yen on an intraday basis, because it trends, which means you get multiple daily candles, which isn't good when you've got a strategy that usually moves 2 days before it enters. So it's never going to be particularly good, is it? The thing that did interest me was Euro US dollar. 10,000 out of 16,000 results didn't produce a profit. They didn't necessarily lose or blow the account massively. They just didn't make a profit. But the strategy that I am probably going to run is scalping half an ADR. And that one there is not it. Interesting to see where that lies. It was probably that one. So it's there. That's the strat. Oh, no, it's not. That's 1.5. Delete stops, delete TP. No, it's not that one. So I'd need to find out whether or not that is profitable on the variation that I think is going to be the best. But this is still producing like 4R returns. It's still massive return on drawdown. It's 3% drawdown. Look, it's hardly drawing down. This is risking $1,000 a trade, and it's drawing down 3% on the account. So it's phenomenal. But there are pairs that it just doesn't work very well on. But it's never going to work on every single pair. You're never going to find a strategy that is just going to work on every pair. It doesn't exist. There are going to be pairs where it just fails. So I've got to do all the data crunching on it. But I'm not sure exactly what I'm going to use. This is all using daily charts. So it's entering on the daily. It is also scaling into multiple positions, but it's scaling in multiples of ADR apart. So it's just gradually getting in. And what I'm finding is it's actually better not to get in heavy and hard, which is why I suspected. New Zealand dollar yen is just finished. So yeah, I need to crunch the numbers on this. Oops, didn't want to do that. Yeah, 7,000 survived there. Look, on a yen pair. It's phenomenal. For half of the tests, out of 16,000 tests, for half of them to come out in a profit on a yen pair using mean reversion, it's pretty damn good. The problem with the yen pairs is the drawdown is ridiculous, but the profit is ridiculous. 126 grand profit, but it drew down 35k. So you've just got to reduce your risk on these yen pairs if you were to trade them. They're just too risky, basically, which we kind of know. But yeah, I'll let you know when I've done all the testing on it. And but this is a new EA. This is I'm not using a position trader EA to do this. I'm using another EA that I've built, which is purely designed to do nothing but that. There's a guy I used to trade with who is an ex-banker, and I met him in a group I was being mentored in, and he contacted me a few months ago. And he uses, he mainly trades the S&P. He's an S&P trader because he's obviously in banks, so they tend to trade the indices a lot. And he came up with a sort of a business idea based on a load of strategies which they used to trade. But he wanted to test and automate them, basically, as an investment vehicle. So think Darwin X, yeah? So think like the Darwin IA stuff. The strategies are returning 10 to 20% a year. Yeah, so they're not going to set the world on fire. You're making 2 to 3% a strategy a month. So, but they are super, super, super safe. The sort of stuff where you would be happy to put your pension into. A bit like I used to trade on the S&P 500. So he contacted me and said, because he knows I do coding, could you code a very simple version of these for MT4, and which I'm going to be doing with him. So we're probably going to start a new website up to show all of this testing and to basically sell EAs on it, which he wants to do. So I said I'd get involved in it and do all the coding side of it. He would deal with everything else. So it's partly why I'm doing this, because one of the strategies that he trades is an RSI-based strategy. So I've built an EA basically that can be used to fully automate any RSI strategy. It doesn't matter what you think of it. If it involves the RSI, you can do it with it. Stops, no stops, scaling in, scaling out, trailing, half exits. It does everything. Basically, I've built him a kind of a Swiss Army knife for the RSI indicator so that he can do all the back testing. And some of the strategies he's got are very simple and they work. But that's the thing, they work because they are simple. So if it does this for X number of days, do that. Yeah, put a stop there and put a TP there. If it gets into profit though before it gets to the TP, shut it. It's that sort of stuff. It's very, very simple. It's about taking money. All the banks' strategies are doing is extracting money. They're not clever. They're not doing anything. They don't know anything that we don't know. All they have is risk mechanisms built around movement that says if it does this, don't want to be in it anymore. If it does that, flip it the other way. If it does this, take that off. Yeah. And it doesn't focus on a risk reward or anything stupid like that. It just makes money. But it makes that much all the time. And it only uses daily charts. So all of his strategies are only daily. I'm going to try and shoehorn some 4 hours in there because I prefer to get in and out faster, but I don't know if it'll work. But I'm going to be building all of those for him. So I'll keep updated if it happens and if it comes off. But it's not the sort of thing that you're going to make a fortune out of. It's kind of the sort of thing you need a big pot of cash for. You know, if you're going to do it with $5,000, you're going to make 500, 1,000 a year sort of thing. It's not worth it. You need a pot of money. It's the sort of thing that, all these PAMs out there where the guys go, we will manage your money. It's that. But it's using strategies that are long-term proven. And a lot of this stuff is nothing new. It's all the stuff in the Market Wizards books, all that sort of thing. It's all the same stuff. It's very, very simple. It's investment strategies. But it's just interesting, isn't it, that RSI2 is one of them. Well, not RSI2, but RSI is used in those strategies because it comes from stocks and he is a stock index trader. Somebody said in the Telegram group, and I bit my lip and didn't say anything about it, but they said about New Zealand dollar CAD, look at it on the daily chart and how overbought it is. Yeah, it's not overbought. There is no product. Not a tangible product. It's not a stock. You're not buying this. It's got no value. Yeah, this is overbought and oversold is a stock terminology for a company value having been bought beyond its value. It's overbought. Yeah, a Forex pair is an exchange rate. There is no value. It is just a number. Yeah, this New Zealand CAD is not worth X billion because it's released a new product. Yeah, so you cannot overbuy or oversell an FX pair. It's stock terminology. Yeah, he's a stock index trader. So he does use relative strength as an overbought signal when a stock or index has been overbought beyond the valuations of the instruments that it's being measured. Doesn't work that way with this. It's a very common misconception, this overbought, oversold. And it comes from, it comes from stocks, obviously, but all the people that trade with oscillators go, oh, look, the stochastic's overbought. No, it's not. This thing hasn't got an intrinsic value. How can you overbuy something that doesn't have a value? Can't. Commodities, same thing. Oil has a value. Yeah, it can get overbought because there is a stock with a value. Yeah, and this is why production is increased and decreased because of the stockpiling, which affects pricing. Gold, tangible product, has a value. Silver has a value. Platinum has a value. An FX exchange rate is just a number. No value to it at all. It can go up and it can keep going up forever because there's just nothing to buy, is there? It's not tangible. Well, I'll let you know about that. It's very exciting what he's putting together, to be honest. I've looked at all the paperwork. He's got research papers on everything. He's one of those guys who, when I was being mentored, I made friends with him very quick, because everything that someone said, he came back with a logical explanation, and I was like, this guy knows what he's talking about. But he comes from a banking background, so you'd expect him to know about it. Yeah, he's got an economics degree. And he's seen, obviously, what goes on in the banks. So he knows how they work, and he knows how not to do it. Doesn't mean you know how to do it. It just means you know what not to do, because he knows how they are moving it. But he still doesn't help him know when things are going to turn around, obviously. We're pretty much always going to find ourselves on the opposite side of the boss. Because of MR, it's just the way it is. I don't know what that means, AC. Opposite side of the boss. I don't know what that means. Afternoon, Robert. You said you stopped Swiss and yen. Why don't you just reduce the number of pairs to 2 or even 1? Just because I don't know what to do with it. Simple. I just don't know what to do with it. What is the Bank of Japan thinking? And what is its forward plan for its currency? Yeah. All other banks operate in the same way. They buy and they sell investment bonds in themselves and other currencies to keep a level amount of manipulation available to them. They control interest rate. They control inflation using interest rates and other mechanisms. They pay attention to unemployment figures and everything. Yeah, the Japanese haven't done that ever. For 20 years, they have had a negative interest rate. They've never choose to trade to manipulate their currency using interest rates or inflation using interest rates. All of the yen's money, all of the wealth of Japan has been held in overseas bonds priced in US dollars, which is why at any moment's notice, they can go sell the crap out of all of those bonds and turn them into yen, please. Yeah. That's how they've always controlled everything. That clearly did not work this time round. They are in a death spiral in the fact that every time they do that, it costs them 50 to 100 trillion to do it. Yeah. When you spend that type of money 2 or 3 times, you don't have it left. They've stopped purchases of overseas bonds or reduced overseas bonds purchases. So they're reducing the ammunition they have to pull this off. If this continues to go that way, businesses in Japan will not be able to export products to the US because it will be loss-making. Therefore, they will either just close or somehow they've got to negotiate this US dollar down, or rather the yen up. And as the US are not changing their interest rates at any point soon, that weakness isn't coming. It's more likely to do that. So the reason I'm not trading it with one pair even is because I haven't got a clue where it's going. The only thing I would want to do is buy everything against the yen because there is a positive swap. If you sell everything against the yen, you will end up hemorrhaging cash in swaps every week. So if you hold a position short, as I did here, for a month, 6 weeks or so, yeah, that cost me 20%, cost me over $2,000 just to hold the position that went nowhere. So I'm sitting there just hemorrhaging money being in it. So the only thing I'd want to do is buy it, but I don't want to buy it because I'm too scared about them doing that again. But I don't know if they can do that again. So therefore, I'm just not interested. If in doubt, stay out. That was drummed into me years ago. I ignored it for years and years and years. Now I pay attention to myself when I see this sort of stuff. I don't know where it's going. I haven't got a clue. I haven't got a clue on anything. I don't know where anything's going, obviously, because I can't see into the future. But this thing, I really don't even understand the economics of what they're going to do moving forward. So if I can't even understand what's driving it, same as crypto. I don't trade crypto. I have no idea what moves it. Who invented it? Yeah. Where's the bloke that invented Bitcoin? Nobody knows. anything about how that thing moves. How can you trade something that has no fundamental? It's impossible. You're just flipping a coin. You're gambling, which is why all these people that make fortunes out of crypto are going, hey, oh, I lost it all. Yeah, of course you did. Because you just basically pressed the button on the right day just before that thing took off. And then you went away and came back and went, holy crap. You're not a trader. You're absolutely fluky, lucky. Yep. Same with this. I pressed the button short here. If you were in the live rooms when I got out of this, I said that intervention's coming literally an hour after it happened. Yep. So I said, as this pulls back into here, I'm going to short it again. If you look back at history, there's always two. The second one came. Everything I lost there, I made it back. This thing owes me nothing. I'm not interested. I was lucky, not skillful, lucky to get my money back on this. I'm not interested in losing it all again. So same with the Swiss franc. The Swiss, I was in. They came out and went, no. We're changing interest rates. Sorry, we didn't tell you about it. 300% ADR day in the wrong direction. You can't trust the Swiss. Yeah, you never could. I've been burnt by the Swiss before when they removed the peg. Yeah, when the Swiss franc peg removal happened, my broker went bankrupt. All my money got put into escrow and I got stuck not being able to access my cash for months and months on end because the Swiss did what the hell they liked. Not interested. I will be interested when I know what they're doing, but they're not letting anybody know. And what I do not want to do is go, all right, let's go long on the Swiss. And then they change their interest rates again without telling anybody. Yeah. Every other currency, including the Fed, even if they say nothing, they do what they say. If they give indication, we can trade it. If we haven't got a clue how it works or what they're going to plan to do, you are flipping a coin. There's no point. We've got 28 Forex pairs to trade. Yeah. If you take 10 of them out of the equation, there's a lot of opportunity still. Yeah. I'm not short of opportunities. So it's just about safety. That's all at the moment, because we are in a very uncertain world at the moment with conflict. And again, if a missile goes the wrong direction, if somebody pokes the wrong person, if a plane gets shot down accidentally, the Swiss franc will take off, absolutely take off for days because it's a safe haven. So will the yen. So if all of a sudden a missile accidentally went from Israel and hit another country, that's it. You're suddenly going to get a 3 to 4 day rally, which will be 400%, 500%, 600% of ADR on the Swiss franc, and it won't stop. Yeah, too dangerous. You've got to think of what's going on in the world. Yeah, fair enough. If I'm in the New Zealand dollar and an earthquake hits Auckland, there's nothing I can do about it. It's a black swan event, tough. But other things you can predict, that, you know, the Swiss is going to have a rally at some point, and the yen is going to do something crazy at some point. But until it does something crazy, there's a high probability it's going to sit there and do absolutely bugger all for 2 to 3 weeks, except cost me spread and swap. What's the point? I just don't know where it's going. But other people, you know, this is the thing about trading. Everybody's always got an opinion, and everybody will always tell you where it's going. And when they're right, God, they'll tell you they're right. When they're wrong, they'll shut up and they won't say a word. Yeah. I'd rather just say I haven't got a bloody clue. Let's trade something else. I don't want to be right on it. I definitely don't want to be wrong on it. I just don't know what it's doing. That's the only reason. You know, and it's when I said I wasn't going to trade it anymore back here somewhere, I got nothing but trolls saying, oh, he's dropped it because he's lost a load of money on it. Doesn't know how to trade it. Da, 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 da. Yeah, who's the clever one now? Everybody that was going, I'm shorting the crap out of it. And I said, don't do that. I didn't come out and go, nah. I was right. I said, I don't know where it's going, but I certainly wouldn't short it. But, you know, you're not here to be right. You're here to make money. So I don't feel confident in making money on this. Even that, you know, the US, the Fed could easily come out. We've got elections happening, as we've talked about earlier. The pound, yeah, the Bank of England could come out and say, actually, we're going to do June. They told us it was going to be August. And that was a 50-50. It can change like that. And it's all to do with who else is changing and what is happening to this. You know, with the pound, this is pretty much target. It's coming down very quick, and we're way higher than these guys who have already dropped. If I refresh, that should hit a 4.25 now, yeah? So, you know, stuff is changing so fast. There we go, 4.25. So looking at the drops now, you've got the Canadian dollar has dropped. The euro has dropped. No one else has dropped. Very likely the pound will be the next. The Fed, and next week, they're not going to do it. We're coming shortly after. So, you know, you just got to be on the ball, very on the ball at the moment. So I want as little as possible to concentrate on. RSI2 with entries on H1 is amazing. I know. That's better. The one that I'm testing is better. Drawdown is better. But yeah, we'll see. I would like to test it by getting out on opposite extension. On the MRA EA, the setting of getting out on opposite signal is for the MRA indicator. Yeah, so there's two settings. One, there's two settings on, I can't show you. On the market reversal alerts EA, there's two exits. One is exit on opposite signal. The other one is exit on opposite, I think it's called alert or reversal. Yeah. This one, when you get into a trade, it basically waits for the condition to be met, a reversal alert to happen. Yeah, and then price to push up in your direction or whatever. When you get the opposite reversal alert, the RSI is not used. This is used. Yeah. If you choose opposite signal, a signal is the condition plus the reversal. Yeah. So if you wanted to get out here, when the RSI is extended above 70 because you got in below 30, when there is a reversal alert above that level, that will exit. So there's two in the market reversal alert CA. There is two of them. One is in V4 settings, and one is in the other, I think. Let's look at the manual just to make sure. I don't use them. So again, these are some of the settings which got added, which just were not what I needed or wanted. So, close order on opposite alert. Right, so that's it, alert. So that one is market reversal alert. It should be changed to say market reversal alert. So if you get in on an RSI extension, and so if extended beyond RSI and you get a reversal alert, it gets you in long. When it pushes up, if you get a reversal alert short, that will get you out. RSI is not used. The other exit criteria is at the top, which is I'm not going to be able to find it. Or is it at the top? Maybe it's down there. I'm not going to be able to find it. This is the problem with this EA. There's just too much crap in it that you're just never going to use. You can't find anything. Was going to tell me about it. It's about line 10 or so. Yeah, close trades on opposite signal. Yeah, that's the other one. Yeah, so opposite alert is a reversal alert in the opposite direction to what you took. So you took a reversal alert, a W pattern long. it gives you a W pattern, an M pattern. Short, it gets you out. Yeah. Opposite signal means that both the condition and the reversal have to happen. So the RSI has to be below there and a reverse alert to get you in long. If there's a reverse alert short, it won't do anything. If there is a reverse alert short above the opposite RSI line, then it will get you out. So that is what you would want, David. But the problem with that is, for example, you get in here somewhere, in there, long, 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 all right? This thing moves up all the way to here, yeah? Right? Then it pulls back. Then it pushes up again. There, yeah? You're still in it. You haven't had it hasn't gone above 30 yet, above 70. You're still in it, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days you've been in this. Yeah. Pushed up, right? You got up there, and then you got a reversal alert on M15 or M5. So that would have been your exit. Fantastic. I can also show you many instances where you would have got in there and it would have done this, and you'd have been sitting there in thousands and thousands of profit, and it never gets above there. And then it just collapses down and squeezes. You missed all of this profit for days and days on end. You were sitting in a massive P&L. But because it didn't get above that RSI line, you didn't take the profit. Nuts. Look at the euro. I'll use the 4 hours. No, hang on. What did I just look at? I just looked at something, and the RSI basically didn't get extended. There you go. So this one here, for example, you got in long, it pushed up into there, and then it came down, and then it's pushed up. So you got in, you could have got in there, you could have got in anywhere here, look. But if this thing suddenly does this, right, and moves at that speed, a long flag, that RSI will never get there because there's no relative strength push. And it will do that. It will get you into profit. You'll have an exit, but you won't take it because it didn't get there. You can't use the other RSI as an exit. Possibly on an RSI 10 or an RSI 2, you might find, or anything lower RSI, you might find that that is a better way of getting out. And if you're getting out, regardless of whether it's in profit or loss, that's fine. But again, you've got this thing where it may not get up there for 3 or 4 weeks. So if it does that for 3 or 4 weeks, you're just going to hemorrhage cash. But try it, test it. Test it on control points in the strategy tester, because that will run pretty fast. And test your theory. You're reliant not on market movement, but on an indicator reading. That's the only thing I would say. Yeah. So if you're sitting in profit for 3 days and you decide not to take it just because a line doesn't cross a line, to me, that's lunacy. If you're sitting in profit for 3 days, take the bloody money. Yeah. If it doesn't hit that line and that 5 grand turns into a 10 grand loss, nuts. This is why you've got to be involved in trading. You can't have anything. Somebody asked in the Telegram group again today, semi-automatic or automatic. Always semi-automatic. I'm in charge of this. This is my money in my account. I'm in charge of it. I'm not letting anything run it for me just because of something that I've seen happen in the past. If there's 2.5 grand sitting there and the news is about to hit, I'm taking the 2.5 grand. Yeah, that thing, because it hasn't crossed a line, not interested. I'm doing manual exits. Backtesting will just show you historically what would have happened. But unless you run 10, 15,000 system parameter permutations and a vast majority of them are profitable, you're curve fitting something to a strategy that's happened in the past, and it's not going to repeat itself. It's very difficult. RSI 2, though, just goes up and down with price pretty much. So, and probably RSI 10, if you're trading on 4 hour, you're trading 10 hours, and 1.5 days, 2 days roughly, aren't you, of price movement with the RSI there. So that you'll probably find is a lot better. And definitely on the daily. I don't know. You'd have to play around with it. You should also put your EAs on that website. No, it's not my website. It's his. He's just asking me to. He's asked me to get involved because I've known him a long time, and he doesn't do coding. He's not technical. He's not anything really. He's a trader, so he's not. He doesn't do any of the stuff. The reason he's come to me is because I have built a site. I've built EAs. I know how the marketplaces work. I know how to support stuff. I know how to do all the stuff. He has all the strategies stuff. But what he wants is my backtesting brain to confirm and to more really as a robustness test, more as I think as a sanity check, if you look at it that way, yeah? So, I said to the guy in Telegram that was talking about who's had good experiences with backtests, shouldn't be asking that question. You should be saying, I have backtested and, yeah, you do your own due diligence. You don't accept anybody else's. If somebody came to me with a strategy and said, this thing returns 90% strike rate and has generated 3R return over the year, I'll go, that's brilliant. Give it in, let me build an EA and test it. I make sure it works before I do anything with anything on any account. Yeah, and he's kind of in the same boat as me, as he wants someone else's input to go, you idiot, you missed this type thing. And if I don't find anything he's missed and I go, that's brilliant, I should be using it. I've got a lot of respect for him because he made a load of money. He still does make a load of money, but not in the way that I do. Totally different. Everything uses a stop loss, and that's the other thing that doesn't so much give me alarm bells on the red flag, but everything he does uses a stop rather than a stop and reverse. And stop and reverse is what the banks tend to use rather than stop. He has got there's 2 stop and reverse strategies, but the vast majority of stuff actually uses a stop loss. And this is the other thing that will confuse most people. There isn't one with a positive R. Every strategy has a negative R. Get your head around that, right? So every time he gets out of the market, he doesn't get out of the market with a higher profit than he's risked on the trade. I've said this in here before, haven't I? Yeah. If I go to 5% a drawdown and take 0.75% profit, that's what I do. Why do I do that? Because I've made 0.75% profit. Who told me that I had to go into less than 0.75% of profit to make 0.75% profit? I let the trade run as long as I want. It's up to me. But everyone else teaches you if you let your losers run, you lose money. Why do the Manx do that all the time then? Why does he do that all the time then? Why is his return on investment huge, but his return on drawdown small? I don't know. But that's what he does. Yeah, and that's what they all do. People that make money. That's what I do. I grab 0.5% profit after I've gone in 1.5% of drawdown because I've made 0.5% profit. That's what it's all about, making money, not about being right, not about having a maths equation that makes you look good on paper. It's about returning alpha, generating revenue, isn't it? So anyway, I'll update you on that anyway. But I think it's quite a long project. The testing I'm doing here on RSI2 on this EA that I've built is kind of doing it for me, but it's using the EA that I've built for him. What I've actually built here is pretty bloody good and versatile. So, which is why I'm redoing all these tests. But I'm doing them in massive permutation tests. But all of these are testing with a stop loss and without a stop loss, so I can see the difference. And it's chalk and cheese. They both make vast amounts of money in completely different ways. And I kind of understand what he's doing with it now, which makes perfect sense. It's quite exciting, but yeah, anyway, it's something I'll update you on. But I'm not going to sell my stuff on there because it's nothing. It's just a different thing. But I'll be involved in it, definitely. Nothing wrong with luck every now and again. Absolutely. Half of trading is luck. All of trading is luck, I would go as far as to say. Yeah. When I press the button on this, it's either going up or down. I'm either lucky or I'm not lucky. I'm unlucky if I go into drawdown. I'm lucky if it doesn't. I'm not in control of it. This is why it's similar to gambling, because it's all about luck, isn't it? When I press that button, if it goes up, I'm lucky and I can get out with one position. It's not skill, because you can't be skillful on something you have no control over. If you've got a bow and arrow, you can aim it, you can pull it back, you can shoot at the target, you can adjust everything. Yeah. If you're pressing the button to go long or short, the banks will either move it up or down. You have no control over the bow. Therefore, once the arrow's left, that's it. Once the arrow's left, it's gone anyway, isn't it? Even if you've got a bow, you can't guide it. Let's think about a guided missile. Anyway, I have to go and read what peg removal is, but do you think it's possible to happen again? No, because it's not pegged. No, tra-la-la, all basically a peg. Some currencies, exotics. So think of all the exotic currencies you don't trade. The Hong Kong, the ZAR, all these other, all these weird and wonderful currencies, the Mexican real, that stuff. They're all pegged to other currencies, meaning that when the US dollar goes up, that currency goes up. When the US dollar goes down, it goes down. So there is a peg. Yeah. When one goes up, the other goes down. So the value is completely different, but the movement is identical. So therefore, if you are trading the US dollar and you're trading the thing pegged to the US dollar, you're just doubling the trade, because every time that one starts to win, that one will win. Every time that loses, that will lose. The Swiss franc was pegged, and what they decided to do was unpeg themselves without telling anybody. So the Swiss franc suddenly went, and it bankrupted. I'm on the US dollar Swiss. I'll show you it. And it bankrupted many brokers, mine included. Alpari UK went bust. Many of them went bust. There it is. Yeah. So it was pegged at 1. Yeah. Go back in the past. Never went above 1. It's pegged. They unpegged it. Right. This is normal market movement. On average, on a big day, this thing would move 149 pips, or let's call it in numbers. It is 1,490. On peg removal day, it moved 18,200 pips. Yeah, it moves 100 normally, moved 18,000. And it didn't just do it in the day, it did it in about 5 minutes. There was no broker on the planet that could fulfill the orders. There was just chaos. And that is what we call a black swan. But nothing's pegged. If it's something is pegged, and the lesson everybody learnt that day was, if it's pegged, you don't trade it. And for months afterwards, everyone said, oh, I'm not trading the Swissy again. And then everyone traded the Swissy again. You never learn. But it's not pegged anymore, so it doesn't matter. If they, I mean, wouldn't put it past them. Suddenly, the Swiss National Bank came out and said, do you know what? We're going to peg ourselves again. And it would do the complete opposite. And that's the sort of thing they do. Like the last interest rate change, they just came out and went, you know what? We've decided to change the interest rates. Chaos. Every position, every bank and institution has in the market, they have to go, whoa, 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 impact, quick. Analysts, what we're paying you 6 figures a year for, where do we go now? I don't know. Hang on a minute. Buy it. Because that's what the Swiss do. They just do. But you just don't trade anything pegged. So if all majors, all minors, absolutely fine. This is why we call them the majors and the minors, because these things move independently of each other. The Aussie, the New Zealand, the CAD, the Swiss, the yen, the US, the pound, the euro. That's it. Anything else, forget it. Don't get involved. You'll be safe. At the moment, though, the yen and the Swiss are, well, the yen is a mystery, and the Swiss is at a point in interest rate changes where we are just unsure. So, but plenty of people are still trading the Swissy. I've just decided to take a couple of months back from it just to see what they do. I want to see what they do with interest rates. It's been a fantastically profitable instrument for me, so I don't want to drop it, but equally I know it is a bit of a loose cannon. Always has been. Once I'm out of the yens, this time I'll stay out. a while, but I'm stuck in now. In a short, I guess. Are you? Yeah. I mean, if you look at the price action after the intervention, yeah, we've had a rally to undo a drop, a rally to undo that drop we've just had. But the difference between the drop we've just had is it didn't do that. What it's done is that. So to me, and this is the confusing thing, I want confirmation of what I don't really want confirmation of where this is going. What I want is confirmation that this is actually starting to trade again, rather than just being either a massive profit take move and new leg, or we actually get some market structure. So it's now pushed down. So if this reversal alert here holds, that tells me that we've got some structure rather than just a V-shaped recovery again. And it has started, if you look at it, it's started to get more volatile. Look at the size of the candles here. And look at this lot. Size of the candles, volume has increased. ADR is increasing. People are getting interested in it. So it is starting to move properly again. But still, no idea fundamentally on it. I think it's starting to come back to life, but I don't know where to go with it. So just get out. But I will, again, the yen, I keep saying it, I've made so much money out of the yen in the last 5 years or so. It's just at the moment not right. And I will go back to it, possibly. But I don't know what it's going to do. It's got to be moving normally. I need to see it moving normally. And obviously for somebody to tell me what impact inflation and interest rates are now having on the yen, because at the moment I really don't know. But stay out for a while would not be a bad thing. Understood. That's why you're the GOAT. Gives the best insight and guidance. This is also why we love your EAs. Yeah. It's good. It's nice that somebody's come to me to check. I almost feel like a teacher. It's like he is a peer. He's not in any way, shape, or form better or worse than me. Just does stuff different to me. But he's come to me like, teacher, can you check my work? Like, yes. Let me build a model for it. Let me back test it all. Let me just check you're okay. There you go. You can now go away and trade your money with it. That's how I feel. I know it's not like that, but it'd be good. It'd be a really good website, I think. And it will be, I wouldn't have got involved in it if it wasn't going to be along the lines of what I do, which is no bullshit. Yeah, everything he does will have verified results, back tested, robustness tested, out of sample tested, 10-year minimum tested, all results out there. This is how this thing works. This is what it does. Yeah. Download it yourself, stick it in the strategy tester, and verify our results. Then if you want the automation of it, here you go. Otherwise, do it manually. Don't forget, everything he does on daily charts, which is beautiful, because what you do is you wake up in the morning and go, signal, go to work, come home, make dinner, go to the gym, sit down. Just before you go to bed, you go, nothing to do. Or close. Or add. Go to bed. Wake up. Rinse, repeat. Twice a day, you have to check your charts, and it will take you half an hour. It's that sort of strategy. It's so simple. They are all so simple. You do not need like these hedging strategies, a super complex model of if it does this and this, then you need to do that in the middle and do that and unwind this and get some of that. And none of that. That's why it works, because there's nothing, so little moving parts to it. If it's done that, do this. If it's done that, do this. If you see that, do that. Really easy. And it's so easy to automate, which means that all back tests are super, super reliable, because there literally is a condition, one. There is a signal, which is a time of day. No other moving parts, a condition, a time of day, a stop loss, a target, and a exit condition, which can be one of three things. All of his strategies work in the same way. Brilliant. I love it. I just love the look of it all. I haven't verified any of it yet, but that's what I'm going to be doing. And it's not going to be a quick thing either. And he wants me to get involved in building the website as well, which I really won't want to do because I hate doing that stuff. So over website stuff. But someone's got to do it. I'll probably get roped into it. Anyway, it's 20 past 3. So as you can see from Lagarde, nothing much. Inflation to reach 2% 1 quarter later than seen in March. So what's that? Nothing. So yeah, Lagarde's finished speaking. So nothing came out of Lagarde's speech apart from the usual stuff. Not going to tell you much because we need data. Inflation to reach 2% 1 quarter later than seen in March. So all she's saying there, I suspect, is we're going to be a little bit later getting to that target than we thought, which means it's more likely they will skip an interest rate, which, again, same as the CAD, makes the euro kind of a bit more neutral, unfortunately. So that 2.6, what they were saying is we would rather that have been a 2.4 by now, same as the UK, but they're not as confident because they've had a bounce. So the next CPI number comes out negative, that will guarantee the next drop. So it's all data driven again, unfortunately, which means we have to sit here and wait. But still, would rather do that. Just unfortunate we've not got any more. Because I finished. We've not got any more guidance to go on. Well, that's bloody good, isn't it? I think I've done 4 back tests since I've started the stream. Flying through them. Only 3 more to go, look. Marvellous. Right, so I'll be back tomorrow at non-farm payroll. So unemployment rate is 2.45 tomorrow. So I'll be back on at 2.30. No, it won't. Sorry. It's 1.15 tomorrow because it's at 1.30. Yep, sorry, it's US, isn't it? I keep getting mixed up. So yeah, I'll be back on at 1.15 tomorrow for a 1.30 start for non-farm. So it's the unemployment rate we're looking at. There's forecast, no change. The Canadian forecast a unemployment rise. So there's potential for negative movement on the Canadian tomorrow. The US 50-50. So it will depend on what that number comes out of as. If we get a 0.2 or more percentile deviation on that figure, we tend to get a big run either one direction or the other. But we've got that information. We've now got that information and we've got no guidance on either of those further. So same as the Fed, we haven't got a clue what's going on with the euro or the CAD moving forward next month. So it might be a case of they use this tomorrow once that comes out to really get stuck into these two as well. So we could see a big afternoon tomorrow. But it's going to depend on what happens with the US numbers. So I'll be back on tomorrow afternoon. As you can see, absolutely nothing on the euro either. So dead duck again. This thing is stuck. The whole Forex market is just stuck. Nothing we can do at the minute. Horrible. Anyway, so I will be back tomorrow. If you need me, I'll be back on. Otherwise, I'll be in Telegram and Discord for anything else you need. And I shall be back testing away furiously, trying to get some more data together. All right. So have a good day. Anything you need, let me know. Otherwise, I will see you guys next session.